Namaste, welcome to Arthaniti, where we discuss money and money matters to help you in your investing decisions. Today, we are going to dive into the much hyped demerger, much talked about demerger of ITC Limited. Now, through this demerger, what the company is going to do is it is going to separate its hotels business from rest of the company. We associate ITC predominantly with tobacco products, but that is not the only business that the company is in. Besides hotels, tobacco, the company has a major presence in the FMCG sector as well. It is the second largest FMCG company in the country. It also has presence in agro businesses, paper manufacturing, and IT sector. So, of these six verticals that the company operates in, it is going to separate the hotels business. Now, it has decided to do this for strategic reasons. What are those reasons? How is this move going to affect the existing ITC shareholders? Is the new hotel company worth investing in? What are going to be the valuations and other details? That is what is going to be the topic of today's video. So hang on and let's start. So effective 1st of January, ITC has spinned off, hived off its hotels business in a company called ITC Hotels. Now, shareholders of ITC Limited are going to get shares in the new business. In what proportion? For every 10 shares held in ITC, shareholders will get one share of ITC Hotels. And ITC is planning to keep 40% stake in the hotels business, with the remaining 60% stake given to shareholders. The record date for this is going to be 6th of January 2025. So mark your calendars. An interesting fact, ITC is going to transfer a whooping 1500 crore rupees to the ITC Hotels company for growth and contingency requirements. What this implies is ITC Hotels is going to be a debt free and a cash rich company. How does this impact existing shareholders? Well, they get direct exposure to the hotel industry. Secondly, they get shares in two focused companies rather than one single conglomerate, and it enhances the potential for value realization. How are the numbers going to look? Well, the ITC hotel shares are expected to debut somewhere between 150 to 175 per share, while the ITC shares are going to be discounted by nearly 20 to 25 rupees to account for demerger. So, this is going to be the impact on the share prices of both the companies. Another interesting fact about ITC Hotels operate in over 140 properties with 13,000 plus rooms in 90 plus locations under six brand names. Why is ITC going ahead with this demerger? Well, firstly, to unlock shareholder value. Secondly, to focus growth into separate entities. And thirdly, to attract strategic partners for its hotels business. ITC Hotels has an ambitious plan of reaching more than 200 properties with 18,000 plus rooms by 2030. The projected CAGR for the 3 years ending 2027 is expected at 13.8%. What is the industry outlook for the hotels business? Well, Indian travel market is expected to grow from 75 billion to 125 billion by 2027. International tourist arrivals in India are expected to reach 30.5 million by 2028, and the sector is aiming to contribute $1 trillion to the Indian economy by 2047. Quite ambitious plans and vast scope for growth. Let us look at the position of ITC Hotels. Well, ITC is the third largest hotel chain in the country, first two being Taj and Oberoi. ITC stands at the third position. It is slated to benefit from the booming domestic demand as well as the recovering international tourists coming into the country. Secondly, it has an asset light model where 33% of its portfolio is managed from contracts. So contracts are given to manage its portfolio. Now this percentage is expected to rise to 42% in the next 5 years. This makes its business model asset light and cost effective. The financial highlights of Indian Hotels stands at its revenue was recorded at 1450 crores and profit after tax at 304 crores for the first half of financial year 2025. I have already told you it is zero debt and is going to sit on a good 1500 crores of cash pile. It plans to invest nearly 8 to 10% of its annual revenue into renovations and expansion. What does the industry projection stand at? Well, the Indian hotel industry is slated to grow at an expected rate of 7 to 9% in terms of revenue for this financial year. Now, pan India premium hotel occupancy is expected to reach nearly 75% for this financial year. So, all in all, the industry projections uh, look quite promising. What does this demerger mean for investors? Let us analyze. Firstly, it gives them a diversification opportunity. Now, this demerger allows investors to adjust their exposure in FMCG and hospitality sectors separately. It gives a good growth momentum to ITC hotels as a separate entity to accelerate growth and improve valuations. Thirdly, the dividend payouts from ITC, which has strong cash flows, can one should expect the dividend payouts to increase after this demerger. Next, this merger has been received well by the market, potentially driving positive momentum for both the companies. But sector dynamics are at play. The cyclical nature of the hospitality industry and the stability in the FMCG sector cannot be ignored by investors. How is the price of ITC hotels going to be decided? Well, on the 6th of January, a special trading session called special pre-open session will be conducted to determine a fair price for ITC hotels. Now, this SPOS session will be used to discover the opening price of ITC shares post demerger. What is going to be the calculation method? It is basically going to be the difference of the share price of ITC at closing on 3rd of January 2025. So today, the closing price of ITC and the opening price of ITC during this SPOS session on the 6th of January. So the difference between today's closing and the opening price on 6th of January during this special session, that difference is going to determine the price of ITC hotels. The stock exchanges, both BSE and NSE, will create a dummy ticker for ITC hotels on 6th of January, the same as was done when Geo Financials was separated from Reliance Industries. While the dummy version of ITC hotels will be visible, traders and investors will not be able to trade in this stock after the SPOS session. Who will be allowed to trade in this SPOS? Well, existing shareholders as of the record date, which is 6th of January, are eligible to receive shares of ITC hotels. Now, these shareholders can participate in the SPOS to understand the fair value of ITC hotel shares. Market participants like registered traders and brokers on NSE will also be able to engage in SPOS, and institutional investors can participate in this special session. So, these are the players who will be able to trade in this special session, which is going to be held prior to market opening between 9 to 9:45 a.m. on Monday. To conclude, some of the highlights: ITC Hotels is going to be debt free, cash rich, and is going to benefit from the booming hospitality sector in India. For existing shareholders of ITC, this demerger can prove to be windfall. For new shareholders anticipating to enter ITC hotels, it is a good company with strong fundamentals and in an industry which has positive growth outlook. But as again, with every investment decision, it is absolutely necessary that you do your own research, seek financial advice from experts, and then align your investment decisions with your financial goals. That is the correct and the best way to reach your goals. So I hope this video has helped you understand the nitty-gritties of ITC demerger and what it means for existing as well as new potential investors. If you have liked my video, please like, share, and subscribe to our channel for more such educational and informative videos. Our aim is to spread financial awareness and literacy. So help us reach that goal. Until next time, stay safe, have a great weekend, and goodbye.